With the GDP story seeming to be intact and calling for a very positive sentiment, we've got gains being anticipated for 10 to 15% on the NSE 20 by the end of the year. Are you in line with that kind of bullish sentiment that's out there?
Thank you, Alishia. Yes, I think I would agree. We're looking like we're headed to a very positive end to the year. But at the same time, it's important to mention that we had a very positive first half of the year to begin with. So I think when you bear that in mind, it's going to be a positive finish to the year, but it may not be as high in its pitch as we saw from January to June, when we saw about 25 to 30% gains across the board.
In the meantime, Kingori, we've got very individual news items that are stealing attention and, dictating the way those individual share prices move on a daily basis. Yesterday, KPLC very much in a positive light where it announced the restructuring of its balance sheet. What are you making of its plans in terms of reviewing just how much, reviewing that balance sheet moving forward?
I think the first point to mention with the news that was coming out of KPLC yesterday, it was really the formalization of news that has been circulating in the market for quite some time now. I think we'd be talking almost over a year since they first indicated that there would be a desire, and we saw that in tenders issued for the restructuring of their capital base and their share structure. Now that that's been confirmed, what we're really seeing is a stamp on a rise in the share price, boosted one by its fundamentals. We saw very good results out of that counter a little earlier in the year. And now I think the market has positively received the news that the government is likely to reduce its shareholding, and the company is likely to be a bit more nimble in the way it recognizes its price and the price discovery on the market, with a split imminent as well as a rights issue to follow. So the market is receiving it positively, and it looks good for Kenya Power going forward.
What sense are you making of where this capital raised is going to be used moving forward? Are we looking at very concrete plans in place at this stage?
I think you already allude in your question to some mystery really about what they're likely to apply the funds to, because obviously KPLC is involved mainly in distribution, so they're not requiring the high intensity capital investment projects you would find with a company like Kenyan in power generation. So there is some confusion, I think, about where exactly they would apply new capital. But I think the emphasis people are looking at is to see how the company might assume a more professional outlook. About 2 years ago, the company had to bring in foreign professionals to run the company, and a lot of the success they're enjoying now could be attributed to that. So I think going forward, really what we're expecting to see is a more professional KPLC that is more competitive, despite the fact that it operates largely as a monopoly.
Yeah. Well, when it comes to capital expenditure, we had Safaricom announce this week that it's not reining back on its planned $285 million Capex spend for this year, and that really being seen as encouraging, where so much focus has been placed on Safaricom and its ventures into data specifically. Let's take a look at what this means for a player like Access Kenya, though. I mean, we're sitting at around 19 shillings at this stage of the game. How do you see that data story playing out for a player like Access Kenya, where competition is only going to be heating up from here on out?
I think it looks very dire, to be honest, for Access Kenya at this point in time. They've had a pretty unfortunate run in 2010, one with management issues, then with strategic issues that they confessed to the market that they had gotten their strategy a little bit wrong. And then now you have this new resurgence in competition from much larger market players. And it's not just in the telecommunication companies. You even have other internet service providers that are much larger, even though they're not represented on the stock exchange. So I really think until we hear concrete new competitive strategy from Access Kenya, you will find the market really pricing in a fall in the share of that price going forward. And you may even find we threaten the initial IPO price, though that looks unlikely at this point in time.
Well, of course, yesterday's 3.7% fallback on that share price, taking Access Kenya to 18 shillings 30. What does this spell in terms of it possibly being a takeover target, Kingori, in your view? Because we know that earlier on this year, there was some speculation that it was just a bit too expensive for Safaricom at that stage.
I think that's another very good point. I think it would be disappointing on some front for the pioneer internet service provider listed on the market to so quickly become an acquisition target. But I think the ground has fundamentally shifted under Access Kenya's feet. And I think acquisition aggressive merger would be the kind of things they would need to think about if they are to remain relevant going forward. They don't necessarily have to become an acquisition target themselves, but with a little creative thinking, they could look to enlarge their stature themselves so that they can be a more relevant market player, because at the moment they are fast shrinking into oblivion, unfortunately.
Yeah, well, within a global context where we've had the pace of M&A activity really rising rapidly, will be interesting to see how that story develops. Also getting a fresh capital injection, housing finance. It's a bond issue, 41% oversubscribed this week, coming in and beyond expectations. What's your view on this counter right now? Because 98% of that backing for that bond issue came from local institutions. So one would assume that they're pretty solid fundamentals in place here.
I think that is one thing, the fundamentals of the company, but you also have to bear in mind the local interest rate regime that has many institutional investors a little bit worried about where they're likely to be able to continue to generate the kind of returns they saw on fixed investments into the future, because we have rates coming down across the board. And in my view, actually, I think when you see the results of the HF bond, one would have to ask how well they read the market, because they're already talking about perhaps enhancing the second or the third tranche of the bond. And I think they may have perhaps overpriced in terms of the interest they're offering the market, because it looks like they might have been able to get away with slightly lower interest. And looking at where we're going, lower interest seems to be the way mortgages and bonds are going to be in the future.